All right, Daryl, thank you. Daryl, I didn't think I got the introduction during webinar 2. A pleasant surprise, pleasant surprise. All right, guys, let's do a quick sound check, quick audio check. Make sure you can see the screens and hear me loud and clear. All right, looks like we're good to go. Awesome, awesome. Before we jump in, guys, how's your week going so far? Any good trades, any difficult trades? Always curious to know how you guys are doing. On our end, let's see, I got one trade open, so we'll see how that one goes. But already pretty close to my weekly goal. We had a trade in coin that we took profits on today. We had a trade in Pepsi that wasn't quite behaving, so we cut that loose. And then in the options room, we bought some calls on the QQQ yesterday. So we're doing pretty good. Steve, just one position. Ben's having a great week. Awesome, awesome. But all right, guys, welcome, welcome. And as always, we appreciate y'all being here. It means a lot to me. It means a lot to us when you show up after hours looking to improve your game. And as a lot of you know, we got the class coming up on Saturday for the official launch of the Big 3 indicator. And last week we did the first webinar. So in the first webinar, guys, we really spent a lot of time breaking down my checklist, all the criteria for bullish and bearish trades. And we really took a deep dive into the indicators that make up my checklists. I want to switch things up a little bit tonight. I want to make things a bit more interactive. And I want to look for some setups together that we can put on our watch list for tomorrow. So here's the game plan, guys. We will go through some slides first, cover a few things, kind of lay the foundation. Then at the end, we're going to jump into ThinkorSwim. We're going to fire up the Big 3 scans, and I'll show you guys what's setting up for tomorrow. I think you're going to like the scan results. I really do. So as always, my friends, I'll try to keep things under an hour, but here's what's on the agenda for tonight. First, I'll briefly touch on the tools and indicators that go into my checklist for A+ trades. A+ meaning the setups fit all of my bullish or bearish criteria. Then I'll show you how easy it is to find these A+ setups using the brand new Big 3 indicator. Then the star of the show, the Big 3 scans, we'll fire that up. I'll show you guys some great examples from the scans that we found just last night. Then we'll run it together and we'll build our watch list for tomorrow. But before we jump in, a quick introduction. My name is Taylor Horton. My friends call me T, so you guys can call me T. And I'm the Vice President of Directional Options Strategies here at Simpler Trading. So I am going on year 10 of being a trader. Safe to say, guys, this is my life. I love trading, and I've dedicated my life to trying to perfect this craft, which of course is a never-ending pursuit, but that's part of what I love about the game. And I know I've also talked about my love of basketball, the first love of my life with you guys before, and Kobe Bryant is my all-time favorite. So what made him so good, and I'm so sad I never got to see him play live. But part of what made him so great was his confidence, right? Crazy, crazy, crazy confidence. As traders, we need that same level of confidence in our process and in our strategy. And as traders, I think a lot like athletes, we're going to perform at our best when we're trading free of emotions, when we're trading free of any fears and any worries. And I'm a firm believer, guys, we can get a lot of confidence in our trading by relying on the right indicators. And now with the Big 3 indicator, you guys are going to see why I'm more confident than ever, even in a volatile market. But we're here to talk about finding A+ trades. So we'll look at a few examples. And this is a trade that we did a couple of weeks ago, my mastery in Zoom. It was a quick trade. We're in on Thursday, out on Friday for a nice 50% return. And we took the trade because it was A+. Right? That's all I want to trade. Fit all my bullish criteria. Right? Not some of the criteria, not 90, 95% of the criteria. It's got to fit all the criteria, right? The full enchilada, as they say. So the ingredients, the tools of the trade, everything lined up perfectly here. And as we know, guys, the markets have changed a lot over the last year. And while the market might not be as quote unquote easy as it was back in 2020, quite frankly, it really doesn't matter, right? There are plenty of A+ setups on a daily basis, bullish and bearish. And that's exactly what we're here to discuss tonight. How can we find these kinds of A+ setups in a volatile market? And of course, in a volatile market, if we're going to be successful, we kind of have no choice but to focus on the best setups possible. So the subpar stuff, the B+ setups, not going to cut it anymore. Speaking of a B+ setup, here's a trade I took a couple of months ago in Dominion. I found this daily squeeze and I got long. Right? So here's the major issue. At first glance, this setup looked good, but it didn't fit all the criteria, right? B+, even A-, it's not enough. 80% of the way there, it's not enough. And to me, that's one of the cardinal sins as a trader, trading anything that doesn't fully fit all your criteria. So this is one of the trades that motivated me to find a way where, we can look at a chart and in a split second with no thinking or opinion, tell whether or not the setup is truly A+, right? Whether or not it's actually as good of a setup as we think it is. Now, to make things even worse, and if y'all have ever done this, let me know in the chat. I'm pretty sure we've all done this at one point. Have you ever taken the subpar trade, right, the B+ setup, only to sit back and watch the setup that you should have traded work perfectly? That's what happened here, right? I took Dominion, the dud, the subpar setup. Meanwhile, Valero was just like cranking on all cylinders. Based on my standards, it was picture perfect. It goes on to make a beautiful move. So a good example of the costly mistakes, and we're not in a market where we can afford these costly mistakes. We can't trade the B+ subpar setups. So for those of you in our trading rooms, we got the options room, we got my mastery, the free trading room. You know how picky I am about my setups. And really what I've done is I've built my entire approach to trading around some of my favorite indicators. And ultimately, those indicators, those tools, they became a big part of my checklists. So here's what we're going to do, guys. Real quick, let me touch on a few of the indicators that I've relied on throughout the years. But here's the thing. You don't really need to understand any of them. These are powerful tools, and granted, they're a huge part of my strategy. But if you guys can just follow the pretty colors, I'll show you how easy it can be tonight. But let's recap these quickly because they are important. Now, if we were to throw all of my tools of the trade on the chart at once, this is what it would look like. And again, these indicators are things I rely on. I can't trade without them. However, the charts get a little bit messy if we add them all at once. And the good news is we've kind of solved that problem with the big three. But we'll dive in here, guys. So for some of the indicators that play a role in my checklists, we have the squeeze. We have 6 different moving averages. We have the ADX and DMI for trend and structure. And then we got the Keltner channels, which help us determine our profit targets. So we'll dive in here. And of course, guys, the first indicator we have to cover, the squeeze. I'm obsessed with the squeeze. I'm a squeeze nut. I fell in love with the squeeze like 8 years ago. And a lot of the last 8 years, or all of the last 8 years, has really been spent trying to perfect the use of this indicator. How can I perfect trading the squeeze? How can I make that my niche? So the squeeze is kind of the foundation of everything. It's at the forefront of everything that I do as a trader. And like we've taught in the past, the squeeze is that moment in time. You guys can probably hear JC's voice. It's the moment in time when the stock is building up energy, preparing for a directional move. So keep in mind, I use the premium version of the Squeeze Pro, but on most platforms, the original version of the Squeeze, the OG, is free. So if we go back to that trade example in Zoom, you can see there was a squeeze here on the 30-minute chart. So on that 30-minute chart, Zoom is building up energy, and it releases that energy in the form of that rally into our target. So the biggest question I get when it comes to trading the squeeze is, how do we know if the squeeze is going to fire long or short? Like how can we stack the odds in our favor in terms of trying to determine which way is that squeeze going to fire? And I've got the answer for you guys here tonight. But here's why the squeeze is so important, right? The major thing to keep in mind, and it took me a long time to learn this, but 80% of the time, the markets aren't really doing anything. We're just kind of trading around, we're chopping, we're moving sideways. It's that other 20% of the time that you're getting those powerful directional moves. So the power of the squeeze, especially in my strategy, this allows us to find stocks that are building up energy, and then we can get long or short before the expansion, right? The release of energy. So 2 phases of the squeeze: compression, then expansion. And I like this analogy, so I'm sure you guys can relate. Think of the squeeze like your dog. So that's our dog, Cocoa Bean. If your dog is locked up in the house, not getting any attention, not getting any exercise, it's just building up energy. Then when your dog goes berserk and it's running around the living room going 100 miles a minute, that's the release of energy. If you guys have young children, it's probably the same thing. But that's a good analogy for the squeeze. Exactly, Mimi, the zoomies, the Cocoa zoomies. So few examples here, guys, and this was a daily squeeze in McDonald's that we shorted. So that's what I love about the squeeze. It's versatile. We can play these bullish and we can play them bearish. But for this trade, we got short at the daily 21 EMA. And always, guys, we're always trying to build our position during the squeeze, during the buildup of energy. And then we get paid on the release of energy, compression, then expansion. And this was a daily squeeze that we did in Raytheon, RTX. Because this one fit the bullish criteria, we got long the 21 EMA. Again, get long during the squeeze. And then we're taking our 40% profit a few days later as the squeeze fires. And we rinse and we repeat. We'll talk a little bit about last year's market, guys, but quite frankly, it was an easier market. After the market bottomed in March of 2020, we just went into this ridiculous trend. So it kind of got to the point where it's like, all right, let's wake up, let's run the scans, let's find a squeeze in an uptrend, and we'll buy some calls, we'll sell some puts, we'll go to the beach, we'll enjoy a margarita, then we'll come back and we'll take our profits. Things aren't that easy anymore. When they are, we love it, of course, but last year, the squeeze led us into a lot of big trades. So one of my better trades last year was a daily squeeze in Google, where I made a little over $15,000 over the course of a couple of weeks. And really all we were doing was finding the squeeze. And my strategy of choice was just selling put credit spreads. Sell somebody else a put and let that premium pour into my account as that squeeze fires to the upside. So that's a lot of what we did last year. So there's a few basics on the squeeze. Now, for any of you who are here tonight, if you're looking to learn more about the squeeze, we'll post a link to my squeeze video here in the alerts, and that video will teach you, pretty much everything you need to know about the squeezes, all right? But then, guys, as far as the other indicators go, everything else I focus on is really a great complement to the squeeze. We know the squeeze can lead to that directional move, but we need a few other tools to help tie everything together. So for me, the other indicators that I use in addition to the squeeze, they all focus on the big three. Right? The big three is trend, it's your structure, and it's your momentum. So for starters, in addition to our squeeze, our beloved squeeze, we all need a few good moving averages to anchor to. So personally, guys, for me, the 21 EMA, the 21 period exponential moving average, that's my moving average of choice. Right? This serves as the mean, this serves as the home base. And pretty straightforward, regardless of the time frame. This is where I'm typically looking to take my entries on bullish and bearish trades. So quick screenshot here of the 21 EMA settings in ThinkorSwim. Pretty straightforward, right? Find your exponential moving average, length of 21, and you're in business. But here's where this is helpful. For example, we find these bullish trends in a daily chart like Valero. I love to buy the dip to the daily 21 EMA, or my favorite trade is finding that squeeze on top of that 21 EMA. And then the same thing for the bearish trades. If we get a downtrend like Zoom a few months ago, I'll short those rallies into the falling 21, or we'll look for that squeeze under the 21 EMA. But regardless if it's a weekly chart, guys, a 15-minute, a 5-minute, what you'll find is that a lot of the most explosive, powerful moves in the market, they start on top of that 21 EMA. So to me, the 21 EMA is the launching pad. Whether I'm looking for an explosive move to the upside or the downside, I'm looking for the stock to take a lift off of the 21 EMA. So if we go back to the Zoom trade here, we got the 30-minute squeeze, and we took our entry on top of that 30-minute launching pad, right? The 30-minute 21 EMA. Get long on the launching pad during your buildup of energy. You collect your paycheck when that energy releases to the upside and the squeeze fires. Now, another way the 21 EMA is really helpful, I really think, guys, one of the more important concepts you want to have a good grasp of as a trader is reversion to the mean, RTM. So plain English, what this means is all stocks in the market tend to do, and I'll show you a few examples, all they tend to do is push away from and then back to the 21 EMA. Right? Stocks move away from the 21, but they always come back home. So that concept of reversion to the mean, it plays a huge role in our entry decisions. It plays a huge role in our exit decisions. So we'll look at a few examples here. But just remember, that's a golden rule. I'm going to share a couple golden rules tonight. That's one of them. All markets at some point revert back to the mean. So if we hop in the time machine, guys, and we go back to the glory days of 2020, 2021, if you look at the weekly chart here, the QQQ, you'll notice all we really did was rally off the weekly 21 and then pull back to it. We rally off the mean and then we pull back to it over and over and over again. That is reversion to the mean. Now, if you look at the current market, which is obviously a little bit different than last year, in the current weekly chart of the QQQ, the same rules apply here in a downtrend. we flush away from the mean and we rally back to it before we roll over again. So basic concept, but a really, really important one. And you're going to see that concept a few more times throughout the webinar tonight. All right, we got our squeeze. We got our 21 EMA. Then the third tool here, guys, this one looks the goofiest, but it might be one of the most important ones, stacked EMAs. When the EMAs are stacked positively, what that means is your 5 EMA is above your 8 EMA, 8's above the 21, 21 above the 34, 34 above the 55, etc. Right? Plain English, when the EMAs are stacked positively like this, the structure is bullish. Right, we're going to keep on going back to the big three: trend, structure, momentum. This is my structure tool. And we got a few labels. We got a few different things here at Simpler that make finding stacked EMAs a lot easier. But you could always add all the EMAs to your chart, which granted does certainly make things a little bit sloppy. But jumping back to the Zoom example here, the squeeze is that moment in time where we're gearing up for a directional move. We're always taking that entry, guys, on top of that launching pad. And as we can see, the EMAs were stacked positively, meaning that 30-minute squeeze had the bullish structure that we need to get long. So we cannot ignore this one. Like, speaking from experience, I learned about the stacked EMAs from John like years ago. I ignored it for a good year and a half, 2 years. I paid the price. Really learned my lesson. I don't want you guys to go through those same frustrations. For a bullish setup on any time frame to be A+, there's 100% got to be positively stacked EMAs. So another golden rule: no positively stacked EMAs, no trade. Then for our bearish trades, guys, it's just the opposite. Then the EMA should be stacked negatively. 89 above the 55, 55 above the 34, etc., etc. And what I'll do tonight is show you how to find the setups with positively or negatively stacked EMAs, like super quickly, super easily. So there's the stacked EMAs. Right? There's your structure tool. Now we need a few tools for our momentum and our trend. So then there's the ADX and the DMI. So ADX, guys, the white line, if the white line is above 20, the trend is bullish. If that ADX is below 20, the trend is bearish. So there's our trend tool. And then as far as DMI goes, the red and the green lines, if you find a stock with green above red, momentum is bullish. If red is above green on the DMI, momentum is bearish. So there's our trend and our momentum tool. So we'll keep tying it together here with that Zoom trade. If you look back at Zoom here, you'll see ADX was above 20. And of course, DMI was green above red when we took our trade. We also know the EMAs were stacked positively, so we know the structure was bullish. And of course, if ADX is above 20, DMI is looking proper, then we know trend and momentum are also lining up as well. Right? We need each of those three things for any bullish trade: trend, structure, and that good old Momo. Same thing here for the UNG daily chart. And we traded UNG quite a lot this year. ADX above 20, DMI green above red. That's bullish trend and momentum. I am only going to get long when bullish trend and momentum is present on the time frame I'm focusing on. All right, guys. Then what about our bearish trend and momentum? Rumor has it we're in a bit of a bear market. At least that's what they're telling me. So for shorts, just the opposite, guys. ADX below 20 means the trend is weak. DMI red above green, that tells us momentum is working in our favor for a short. And I know I'm throwing a lot at you here, but I promise you really don't need to understand any of it. And I'll show you why you don't really need to understand any of it. But alrighty, lastly, for the indicators, the ingredients here, this kind of ties it all together. On my charts, I got 2 sets of Keltner channels. So these help me identify my targets on my bullish and my bearish trades. So for that Zoom trade, we're getting long with that 21 EMA, and we're taking our profits on that rally into the 2 ATR Keltner channel extension. So what you want to do, guys, is put 2 sets of Keltner channels on your charts, right? The first set is going to measure 1 average true range move above and below that 21 EMA, the launch-in pad, and the second set of Keltner channels is going to measure 2 average true range moves above and below the 21 EMA. So there's the ThinkorSwim settings for the 1 ATR Keltner channels. Displace of 0, factor of 1, length of 21. Make sure, guys, you change the average type to exponential. If you don't change the average type to exponential, it's not going to line up how it should. And then you'll throw on another set for the +2, -2. Right? Just again, make sure you got to have your average type changed to exponential. Right? So for bearish trades, where are we looking to get short, guys? 21 EMA every time. And we take our profits on the flush into that -2 ATR Keltner channel extension. And here's a reason. Right? Remember that concept of reversion to the mean? We want to take our profits before that reversal back to the 21 EMA. So another golden rule. Right? Golden rule number 3. Anytime a stock is trading at +2 or -2 ATR under that 21 EMA, there's a growing probability of a reversion to the mean around the corner. And remember, all stocks at some point are going to revert back to their mean. So taking profits at that Keltner channel extension, that basically ensures that we're getting the high probability part of the move, and we're taking our profits before that stock is potentially thinking about coming back home to that 21. So as a recap, guys, those are some of the ingredients that make up an A+ trade, right? The proper combination of those different tools that can lead to the trades that we're looking for, regardless of the market environment that we're in. The squeeze, we got our 21 EMA, we got our stacked EMAs, positive or negative, we got ADX and DMI, then we got our Keltner channels. And remember, this all focuses on trend, structure, and momentum, the big 3. So for my bullish checklist, this is what we're looking for. And we're looking for this, guys, across multiple time frames. Ideally, we have a squeeze. It has to be trading above the 21 EMA. The EMAs 100%, like no questions asked, have to be stacked positively. We need ADX above 20, and we need bullish DMI. If we can find that combo, we're taking entries at the 21 EMA. We're taking profits at +2. Then here's what we're looking for the bearish checklist. Ideally, a squeeze. We want stocks trading below the 21 EMA. We need to make sure our EMAs are stacked negatively. Then you want ADX below 20, and you want bearish DMI. We find that combo, regardless of the time frame, we're getting short at the 21 EMA, and we're taking profits, as always, at that -2 extension. So to me, it's really that simple. Like, tie it all together here with the Zoom trade. The only reason I took that trade was because it fit all that bullish checklist criteria perfectly. We got the squeeze, right? Our moment in time. We're trading at the launching pad, positively stacked EMAs, ADX above 20, DMI green above red. That all comes together. We're getting long to 21. We're taking profits at +2. To me, that is an A+ trade, right? And the great thing about that is when these things all come together on any time frame, it can lead to trades like this, even in this volatile market. So those, my friends, are the components of an A+ setup. Now, the biggest issue here, which probably sticks out as soon as you look at that chart, as powerful as these tools are, and I can't trade without them, when we combine them together all at once, that's just a lot of crap on the screen. Right? And when we kind of clutter our charts up, it's easy for things to get lost in the noise. Meaning, it might look good at first glance, but what if it truly isn't A+? And because I know how powerful and important these things are, going back a few months ago, the goal was, I just want to find an easier way to go about identifying nothing but A+ setups. Like, I don't want to waste my time with anything else anymore, right? All these tools are important, and I can't trade without them. But when I throw them on the chart at once, it's too much clutter, too much noise. Right? So the question is, how can we determine when a setup fits all of our criteria across multiple time frames without the need for overloading our charts and having to check every time frame? That's time consuming. So that was our goal earlier this year. And guys, I think we nailed it. So now y'all got a sense of the tools of the trade, showed you a little bit of the bullish and the bearish checklist. Now we can start to clean things up and make our jobs a lot easier. So in the chat, y'all, show of hands here. Which chart do you prefer visually? Which chart looks cleaner? Which chart looks easier to work with? Chart A or chart B? Mikey says chart B. Danielle, Brian, Cheryl. Here you go, Mimi. Yep, simple, guys. I'll give you a close-up of chart A. Got a lot going on there. There's a close-up of chart B. So I agree with all of you. Chart B. Way cleaner, right? Way cleaner. But all those tools on chart A, I need them. Right? 8 to 10 years of trading, those are the things that matter most to me. So what if I told you those little green arrows there, they take the place of all those indicators that we had piled on the chart? That sounds a lot better, right? If that green arrow can replace all those other indicators, suddenly our job gets much easier. And it gets even better than that, guys. But just remember, and I know we talked about this last week, we're always going to have to work extremely hard to reach our full potential as traders. And as a Kobe Bryant fan, I'm all about putting in that hard work. But I, and hopefully all of us, we want to work smart at the same time. We want our process to be efficient. So going back a few months ago, guys, that's when I got together with Eric Purdy. And if any of you have ever purchased a simpler indicator, there's a really good chance Eric built that indicator. So I linked up with Eric and I told him, basically, I was like, hey, here's what I'm trying to accomplish. Obviously I can't do it. You got the skill set. But I was kind of like, is this even possible? Like, can we take all these things? Can we incorporate multiple time frames? Can we incorporate like 6 or 7 pieces of criteria? And the goal wasn't to just build something that I could use, but being that I'm in the options room every day, every week I'm on the mic for hours and hours trading with other traders, I wanted to build something that we could all benefit from. Something that could take out the guesswork, right? Something that can help us all become much more profitable traders. So linked up with Eric, gave him the ingredients, and then that man got to work. And as he has done historically, guys, Eric came through in a big fashion. And that is how the big 3 signals were born. So as a lot of you know, this is our brand new indicator. And after like 10 years of trading, finally feel like I got my tool. Like, such a big part of trading is finding your niche. And I don't think anyone likes to admit it, but the reality is we're all a bit different, but for a lot of us, the first 3 to 5 years is really about finding your niche. I was able to find that niche, and that led me to this point where now we turned all the criteria, right, all the ingredients into a brand new indicator. So to create the big 3, here's what we did. We took all the checklists we just looked at, we took all the indicators that we just discussed, and we threw them together. Now, I got to mention that on their own, guys, those tools are great. I've been using them for years. They've all withstood the test of time. But the magic happens when we combine them together, right? That gives us incredible edge. And most importantly, with the way we built the indicator, I'm doing like zero thinking. The only thinking I'm doing is taking all of the A+ setups and just trying to figure out which one do I want to trade. And we're calling it the big 3 indicator because of those ingredients. What do they focus on, guys? Right? Trend, momentum, and structure, the big 3. So remember that Dominion the Dudski? Lo and behold, if I was using the big 3 signals, like immediately I would have seen that chart and said, we can do a lot better, right? There was no buy signal, no green arrows. This just makes my job so much easier. I never would have traded that stinker if I was looking at things through the lens of the big 3 signals. So we'll start diving in here, y'all. And like I said, powerful, but super simple. You don't need to understand the DMI, the ADX, the stacked DMAs. If you do, great. But if you can just follow the pretty colors, you're going to be golden. So the big 3 indicator, it plots our buy and our sell signals on the charts with green or red arrows. And here's the motto: no signal, no trade. No questions asked. And then we have the multi-time frame big 3 labels, right? This gives us an immediate bird's eye view of all of our potential signals across all time frames at once, right? But here's the key. Our signals are only printed when 100% of our bullish or bearish criteria lines up. Meaning the EMAs, the ADX, the DMI, the squeeze, it's all coming together at once. It's the only time we're going to get a buy or a sell signal. And that's what makes for an A+ trade. So when I look at a chart, I can look at the big 3 labels and instantly I know whether or not any of those time frames fit my bullish and my bearish criteria. So like right away, looking at NVIDIA here, we got green arrows and we got green labels on the 30-minute and the 15-minute chart. This means, guys, both of those time frames meet all of our bullish criteria. Not 95% of it, the full enchilada. So if we have that buy signal, we can look for bullish trades on those time frames. No thinking, no biases, no opinions. But if there's no buy signal, guess what I'm not doing? I'm not looking to get long. Not looking to get long. So then if we pull up Coca-Cola, for example, we have red labels and red arrows on the 15-minute and the 5-minute chart. Red labels or arrows means all of our bearish criteria is met. So for something like this in a split second, I know it is nothing for me to do here for a bullish trade, so I'm going to avoid getting long, and instead, I can look for bearish trades on those time frames. And like I mentioned earlier, you don't have to understand the inner workings of all those other tools. Just follow the pretty colors, and you guys can, and I think you will, make a lot of money using the indicator. So here's a bit of a cheat sheet, and we'll start breaking things down here. So green labels or green arrows, bullish criteria, 100% lining up. That's our buy signal. Red label or red arrows, that's our sell signal. Anytime that we don't have a green or a red arrow or a label is yellow, that's neutral. Typically, guys, neutral doesn't really offer much edge. Nothing really suggesting the path of least resistance is to the upside, but at the same time, nothing really suggesting it's to the downside. So these make for good iron condors, or quite frankly, they make for good setups to just flat out ignore. Now, to take things a step further here, I had Eric splice things up a little bit more. So if a label or an arrow is bright green or bright red, that means our bullish criteria or our bearish criteria lines up perfectly, and there's a mid-compression squeeze. So like I mentioned, guys, go watch the squeeze video that we're going to put in the chat here. But if you're familiar with the Squeeze Pro, there's different compressions, right? Low compression, mid compression, high compression. My favorite squeeze, the one that I cut my teeth on, is the mid compression squeeze. So if you guys want to follow along with basically my main strategy, that's it. You're looking for bright green or bright red signals on any time frame. And when we run the scans, I'll show you a bunch of examples of these exact setups. It's a really, really good combo. And because that's my favorite trade, we bought some calls in Cisco today in my mastery. 30 or so minutes before the close, I ran the big 3 scan, which only brings me setups that have our signals. Like, I don't want to focus on anything else, right? Ran the scans and we took our position. So I'll show you guys here in a bit, but I'm telling you, the scan is crazy. And yeah, it's a volatile market, sure, but it's crazy how many clean setups there are, bullish and bearish, across multiple time frames. So we'll talk about the big 3 buy signals here first. Okay? Like I said, green arrows or green labels, that time frame and the time frame above it meet all my bullish criteria. So real quick, guys, I'm not going to get a daily buy signal unless the weekly chart also fits all the criteria. So right now we're in the market, we're not going to see too many daily buy signals because of the current structure of the weekly charts. But on the setups with our green big 3, that's where I'm looking to execute the trades in my bullish playbook. So for me, what's the bullish playbook? I like to buy the dip to the 21 EMA, and I love me a good squeeze. Just remember, we're only going to buy that dip. We're only going to get long in that squeeze if we have our buy signal. Golden rule, no signal, no trade. So here's a name we did a lot of buying the dip in this year, right? UNG. And you guys can see, for a few months, like starting in March, UNG starts printing our daily buy signal, and almost immediately, this becomes one of the strongest trends in the market. I never even looked at UNG before, but as soon as we got the buy signal, I'm interested. So, we get our first buy signal back in March. UNG's trading around $17, and then it rallies into a high of just about $33. It's almost 100% move over the course of 3 months. So as long as that arrow's on the chart, we're getting busy, right? We're buying the dips. We're getting long on those daily squeezes. We're having a great time. If the buy signal is there, we know all of our bullish criteria lines up, right? This is our time to get aggressive. When we have those signals, these kinds of trends can feed you over and over and over again until, guys, the signal disappears. That's when we got to disappear. So remember, no signal, no trade. Whenever a setup no longer has our buy signal, we have no choice. We have to move on to a better setup. We're only trying to trade A+. So when UNG lost our buy signal on the 15th, we immediately stopped looking for bullish trades. That's how we're able to keep our profits that we made from the trades that we took when it was A+, when it had our signal. And you can see how quickly it fell apart here. Now, today, it actually looks like UNG is trying to shape up a little bit. So we're sitting back. We're waiting on some buy signals. We might be going back to Old Faithful there. Same thing with Valero. With that daily buy signal, Valero, all the other energy stocks, they offered, I think, the best buy the dip opportunities that we've seen in the entire market this year. Right? So it's that easy, guys. Find your buy signal, get aggressive, and then stop. Stop everything as soon as that buy signal disappears. Valero lost the buy signal on June 15th. At that point, we're done getting long. And after it loses the buy signal, pulls back by like 20% over the course of about a week. So imagine you continue to buy the dip here. You're giving back some, if not all, the profits that you made from when that baby was A+. And if you guys are familiar with my trading, you know I love my weekly charts. I love my daily charts. But what the big three signals have given me are all these new plates of opportunity on lower time frames. So we're in a market where there's a lot of opportunity to catch on those lower time frames. So our buy and our sell signals, they work great on daily charts all the way down to the 5-minute. So recent example here from Zoom. Zoom had our buy signal on the 1 hour, the 30-minute, the 15-minute chart. Just like how I'll buy that pullback to the daily 21 in Valero, I can buy the pullback to the hourly 21 or the 5-minute 21. I can buy the pullback to any 21 EMA as long as we have our buy signal. That's what we did here in Zoom. We got the pullback, we got the pretty green arrows, and we sold our put credit spread and we took our profits, a few days later. So we can BTFD on any time frame as long as we have the pretty colors. And then, of course, guys, the ultimate combo. This is my obsession: squeezes plus buy signals. So yesterday in the options room, and if any of you in the chat are from the options room, let's give the options room a quick shout out here. But yesterday we bought some calls in QQQ because of this 5-minute combo. 5-minute squeeze, and we got our buy signals. And now we're up nicely on that trade. And I'll show you guys the live charts here tonight. I'm actually thinking potentially, the Qs in the whole market might be gearing up for a reversion to the weekly 21 EMA. We'll talk a little bit more about that. But if we can nail this move, that'll be good for a 150, 200% return, all based on an entry in a 5-minute squeeze. So to me, it's like literally that easy. Find a squeeze with a buy signal, take action. You bring me a squeeze with no signal, not interested. So not complicated stuff, but really powerful. When we find a squeeze that has our buy signal, the path of least resistance is to the upside. The squeeze, as we know, is the buildup of energy. The buy signals, they stack the odds in our favor of that squeeze firing in our direction. There's the move that the QQQ made after firing that 5-minute squeeze. So we're off to a great start on that trade, and the signals worked as advertised. So there's a bit on the buy signals. Then we got the big three sell signals. Just as straightforward, guys. When the red arrows or labels are printed, that time frame and the time frame above it fit all of our bearish criteria, right? As long as that sell signal is active, path of least resistance is to the downside. So on the setups with our sell signal, that's where I'm looking to execute the trades from my bearish playbook. What's the bearish playbook? I like short and bounces to the 21 EMA, and I love getting short inside of squeezes. But obviously, we can only do that if we got the red arrows or the red labels. We need that sell signal. So here's an example of what I would call a textbook short from Wynn Resorts. Right? That active sell signal, that red arrow on the daily chart, tells me everything I have to know. I don't got to look at DMI. I don't got to look at ADX. I don't got to look at stacked DMAs. That red arrow tells me path of least resistance for the weekly and the daily chart is to the downside. Trend, structure, momentum, they're all screaming, we're going lower from here. That makes for a perfect short to bounce candidate. These kinds of things, I love getting put debit spreads. I love selling call credit spreads. And that's what we did on this one. Shorted old Win with a call credit spread. Where do we get short, guys? Always at 21 EMA. Where do we take profits? Always at -2. Right? So all the tools of the trade, they are right there. And remember, the squeeze works amazingly well when it fits our criteria, bullish and bearish. So if we can find a squeeze with our sell signal, everything is pointing towards the probability of that squeeze firing to the downside. I'm not going to buy puts. I'm not going to sell calls in the squeeze or in anything that doesn't have our sell signal. And in a downtrend, same rules apply. Just like that uptrend in Valero, UNG, in these downtrends, shorting the rally to the 21 EMA, it's a great way to make money, guys. So if you look at the daily chart here in Zoom, with all those sell signals a few months ago, you're basically rinsing and repeating that same short over and over again. Rally to the 21, short it. Rally to the 21, short it. Over and over again until what happens? the sell signal disappears. Guess what we're not doing anymore? Getting short. Zoom lost our sell signal in late May, and then the bad boy proceeds to rally by about 20 to 25%. And I've been there before. You do not want to be caught short in a 25% rally. We do not want to become the short squeeze. We want to be on the right side of that. No sell signal, no short. We've got to know when to move on, even from the setups that have been paying us hand over fist for weeks on end. So this just makes it, I think, super, super simple. Now, what about trade management? You follow the pretty colors. So in my mastery, we had bought some calls in Pepsi last week. And of course, when we got long, we had our buy signals. Today, we're sitting here, the market's rallying, things are looking bullish. Look at Pepsi, guys. From head to toe, no buy signal, no sell signal. It's neutral. It's not A+ anymore. So we cut that loose in favor of a setup that had our buy signal, Cisco. So what I like about the labels here, we can kind of quickly check the health of the stock that we're trading from the top down. And I think that's how you can really exit trades before things get a lot uglier, before things turn into a much bigger loss than needed. So for my playbook, we can buy the dips. We can short the rips. My biggest passion, trading those bullish and those bearish squeezes. But what about reversals? Let me know here in the chat, everyone, how many of you like to try to catch the reversals? I'm curious. But that's exactly what we did in coin this week. So this was an awesome trade. We bought calls on Monday in my mastery. We sold them this afternoon for an 80% profit. We cut a pretty big rip. So, here's the thing. I've never really been big into trying to catch bottoms and reversals. And as a lot of us know from experience, trying to catch that falling knife can be super painful. So when we built the indicator, my real focus was on like the clean trend types of trades. However, and kind of by accident, I'm sitting here all day. I'm watching nothing but the big three. I started making some observations. Now, it's a different checklist entirely because when we're trying to catch these reversals, we are not working with bullish daily trend. But what I've learned is that the big three reversals, or the big reversals, they actually start with improvements on the lower time frames. And again, it's a little bit different, but it still comes down to following the pretty colors. Now, so for a little bit of context here, the first thing I'm looking for is an oversold weekly chart. And typically, guys, anything trading at -2 on the weekly chart is oversold, but it's not enough. Right? So many other things have to come together, but when they do, these reversal moves are explosive. And if we're being honest, these are the trades in this market that actually offer the best risk reward. So we find a chart that's oversold in the weekly, and then by focusing on the big three labels, what we're looking for is that moment in time when the signals begin to transition from bearish to neutral, right? Red to yellow, and then from neutral to bullish, yellow to green. But it's all about those lower time frames, mainly the 5-minute, the 15, and the 30-minute. So using those labels with my reversals checklist, this is a plate of opportunity that, over the course of 8 to 10 years, I've never really had as a trader. And right now we're in a market where these kinds of reversal trades, they're going to offer some of the best potential rewards. But I'm telling you guys, you can't, we've all done it, right? You can't blindly try to catch that falling knife. If you aren't focusing on the right criteria to try to time that reversal, we know those trades can go against us really quick. So it's not enough for something to be oversold. Rather, we need the big three labels to show us that things are gearing up for a reversal. So this is actually one of the best things that came from the indicator. And now I've got a new trade in my arsenal that, quite frankly, is perfect for the market that we're in. The big three indicator makes buying the dip, shorting the rip, trading the squeezes much easier. And now I've discovered how to use it to catch reversals. So just a quick example here, one of the pieces of the puzzle, and keep in mind, this is, one of many things on the reversals checklist. But guys, notice how Roku's trading down there towards -2 ATR on the daily chart, yet there's no daily sell signal. No red arrow, no sell signal. This tells me, yeah, it's a bit oversold, but the bears don't really have full control. And now if all the other criteria on my reversals checklist lines up, that can lead to these huge rips off the bottom like you saw here in Roku. But, it starts from the ground up. And with the big three labels, the great news is we don't actually have to flip from chart to chart. You don't ever have to actually look at your 5-minute chart. You got your bullseye view there with the labels. So this is something I'm really excited about. At the moment, I'm looking for most of the market to potentially rally all the way back to the 21 EMA. So a lot of the trades that we're focusing on right now sprinkle in a lot of the criteria from the reversals checklist. But all right, guys, we're going to jump into the scans here in a few. I think we're going to have like more than enough good looking opportunity for tomorrow. But here's what you guys are going to do every morning and every night to get prepared using the Big 3 indicator and the Big 3 scan. Right? Every morning, every night, I run my Big 3 scans, then I import those results into my ThinkorSwim watch list. Then using the Big 3 layout, which we're going to hook you up with, I can quickly filter through all those results and handpick my favorites. But the key to making that process efficient is a good scan. You need a good scan. You want a really specific scan. I only want to see setups that have my buy or my sell signals. To me, nothing else matters, right? We only want to trade the top shelf A+ setups. We only want to trade the chef's kiss kind of stuff. And we'll fire up them in a little bit, and we'll find some top shelf setups. And granted, there's a lot of different ways that you can use the indicator, to make your money. For me, outside of the reversals and buying the dips and shorting the rips, my favorite combo, like by a mile, is the squeeze plus the Big 3 signal. I think that's the best combination. Signal tells us what the path of least resistance is. The squeeze gives us the oomph to trigger that directional move. So I run the scan, and then I'm using my Big 3 labels. Rapid fire, I can run through all those scan results. I handpick my favorites, right? So that makes the whole process so much more efficient. And this is kind of my life as a trader now. And I wake up excited every morning to run those scans. And here's the good news, guys. The whole scanning process doesn't take too long. And guess what? If nothing's lining up on the 5-minute, if nothing's happening on the 15, the 30, etc., we're not trading that day. Then we'll go enjoy some of the freedom that comes with being a trader. We'll take our dog for a walk. We'll go spend time with family. We're only trying to trade when our signals are printing. And those signals tells us we got the day off. So as you'll see later, there's a lot of great setups in the market right now. But keep in mind, we only need a couple of trades per week to meet our goals. And that's what's exciting is right now there's way more than a couple. But we can utilize the scan and the signals to find the very best. So this week I've already hit my goal with that trade in coin. And granted, the QQQ trade is open, so to be determined. But just 2 trades there have already got me off to a great start. So yesterday, guys, about like 30 minutes before the close, I fired up the 5-minute Big 3 scan, and here's what I found. Crap load of beautiful 5-minute squeezes printing our buy signals. And they really set the tone for today's session. So we'll check out a few, and then we got to find a few for tomorrow. So mind you, these are all from last night, like 30 minutes before the close. This is what we found. QQQ, 5-minute squeeze, 5-minute buy signal, boom. The S&Ps, 5-minute squeeze, 5-minute buy signal, bang. Great move. Amazon, total beast here today. 5-minute combo, and it's off to the races when the market opens today. Another beauty here in NVIDIA. And man, the semis are starting to look really good right now. But there's your 5-piece combo. Squeeze, buy signal, and remember, if the arrow or the label is bright green, it's my favorite kind of squeeze, the mid compression. And not to be outdone, AMD followed Big Brother NVIDIA with the same combo. 5-minute squeeze, 5-minute buy signal, and off it went. So these are all from this morning. Right? You only need a few per week. And guess what? When the market is rolling over, it's just as easy to find these kinds of A+ trades to the downside. Same exact process. And again, I really want to stress, I'm looking for these trades on every time frame. And of course, the bigger the time frame, the longer the trade usually lasts. But I'm taking these moments in time wherever I can get them. And for me, guys, that was a necessary adjustment to this current market. The A+ trades, they're not always going to be in the weekly or the daily charts anymore. But I thought you guys would like this one. So, and if you're from the options room, obviously you remember this trade. A lot of us had some nice trades in Google last year. The biggest, of course, was our founder, John Carter. He nailed Google here for I forget the exact number, but it was a $5 million+ trade. So I wanted to go and look at a few of our bigger trades from over the years, and sure enough, a lot of our best trades, they had the big three buy signals. But in this market, we can work our bullish playbook. We can buy the dip, we can trade the squeezes on any time frame. We don't have to rely on that daily chart. And same thing goes to the bearish trades. We can take them on a daily, we can take them on a 5-minute, a 15-minute. We go wherever the signals are. And to me, guys, this is the goal. Like this fired me up today. One of the traders from our rooms sent this in earlier. On one trade, they made enough to pay for the indicator. Like I freaking love that, right? One trade, and now this powerful tool that they can use forever is paid for. So what I want you to imagine is, imagine what you could accomplish over the course of 5 to 10 years using these tools. And of course, that's my goal, right? I want to show all of you exactly what's possible when we get to the point where we're trading nothing but the A+ setups out there. So just today and yesterday, you can see there's a lot of opportunity in the market. Here's a few different ways, guys, I've gotten a lot of value out of the indicator, but really the biggest thing is just the confidence. Now, these signals have been a huge source of comfort and relief in a bit of a crazy market. And the thing is, I know these setups work, right? These are the ingredients and the tools I've been using for years. It's just that the indicator makes it all so much easier and a lot more efficient. But just as importantly, it's uncovering a lot of the opportunity on those lower time frames I typically wouldn't focus on. And believe me when I say there's a lot of it. So now that the indicator is live, we are done building it out. This means I get to go back to doing what I do best, which is nothing but trading these setups. But all right, guys, we are going to jump into the charts here in a minute. We'll fire up the scans. As promised, I am going to send you home with one scan that isn't exactly going to take you to the big three setups, but it'll give you a really good step in the right direction. So we'll jump into that in a minute. But it goes without saying, I am pumped up about what Eric built here for us. And I really do feel more confident in my trading now more than ever, just because of how easy things are. So I think this can really help you improve your game. And as of tonight's webinar, guys, it is live and it is time for us to rock and roll. So we'll take a look at a few different packages here that we have for Saturday's class. Then, as promised, we'll get into the good stuff. And to be honest, I'm excited. I didn't get a chance to run my scans after the close, so I'm kind of interested to see what we got, all right? But like every class, we got a few different packages for y'all to pick from. So we'll go through a few of those quick. We got the basic package, the pro package, and then the big whopper, the elite package. So basic package for $497. You'll get access to the big three signal strategy class on Saturday, July 23rd. So that's this Saturday, 12 p.m. Central. Guys, this is where we're going to pop open the hood and take a deep dive into the indicator, the ingredients, and I'll show you exactly how I'm using it, how I'm using the scans to find the bullish and the bearish setups across any time frame. So we're in a market where we're looking for swing trades. We're also looking for day trades. And of course, at the basic package, you get access to the big three indicator, and that includes the buy or sell signals plotted on the charts, the multi-time frame labels, and the big three squeeze scan. And at the moment, we got the indicator running on ThinkorSwim and TradingView. I've never used TradingView before, but it looks really pretty on TradingView. But then we got some exciting news, guys. Kind of going back to the reversals checklist, we got a new bonus here. Because of the current market we're in, we want to do something a little bit special for those of you that are taking the course of me live. So like I mentioned, we're in a market, AKA a bit of a downtrend, where these big reversals are all over the place. So we're in a perfect market for this reversal strategy. And like I mentioned, when I first launched the big three, I wasn't creating it from the perspective of, I want to trade reversals. But then I started seeing signals left and right that make for A+ reversal trades. So, from everything I've taught and what I'm going to focus on in Saturday's class, it's the same thought process, but a completely different checklist. We're still following the pretty colors, but being that it's a reversal, it's totally different. But it's also very low risk, very high reward. So this might be the only time that we do the reversals class just because of the market that we're in. And I'm not too sure if we're going to include it on the store in the future. I'm not too sure. So I wanted to get this recorded because there were some questions about it. And I think it's going to be awesome for us to add a new plate of opportunity to our game. I love taking my A+ trend trades, but I've also kind of fallen in love recently with taking advantage of these big reversals, just like that trade that we did in coin. So I want to share that knowledge with everyone that's getting the big three indicators tonight. So for those of you who have already signed up for the class and purchased the indicator, and for any of you that purchased the indicator and signed up for the class tonight, we're going to make sure you get access to the reversals bonus class. And here's my goal, guys. I want to make that bonus class. I want to make that worth the cost of admission alone. That's my goal. So I'm super pumped about that. But then, of course, we got the live trading. All right, the more time we have together while the market is open, the more value you're going to get. And quite frankly, that gives me more time to work with you so we can accomplish my goal, which is helping you make back the money that you paid, that you spent on the indicator. I want to make sure you get a really quick return on your investment. And like Trader G from our options room mentioned, one trade today covered the cost of the indicator. That's my goal. So basic package is a great value, but the live trading sessions, that's where we get to get busy together in real time. So with the pro package, you get access to everything in the basic package, along with 2 live trading days on July 26th from 8:20 to 12 p.m. Central, and again on July 28th from 8:20 to 12 p.m. Central. And then, guys, the Big Mac here, the granddaddy, the elite package. So with the elite package, you get access to everything in the basic package. You get 2 days of live trading from the pro package and another 2 days of live trading on August 1st from 1 to 3 p.m. Central and August 3rd from 1 to 3 p.m. Central. So the additional time together is great. More time to trade, and really, guys, more time for you to ask your questions and get your answers. And what I want to do in the live trading sessions, I want to work you guys. We're going to be busy. I'm going to give you the process for running our bullish scans. You're going to get all the scans, right? Reversals, bullish, bearish. Then we're going to do it all together. Basically as if you were in my office. We're going to do the same exact things I'm doing every day. But that is the big goal. If we have 4 days to trade together live, we should be able to find a few opportunities that could definitely cover the cost of the course. And in the last 2 classes I did, we accomplished that goal. So we're going for the 3-peat this time, guys. And then a really cool feature here with PayPal, you can click on whatever product you would like, add it to your cart, and then you can apply for a line of credit through PayPal with 0% interest for 6 months. So one more look at the packages, guys. We'll come back in a little bit. We'll do some Q&A. But as promised, I want to fire up the scans here. And then we got a few testimonials. And let me know, for those of you that have already purchased the indicator, let me know here in the chat what trades you've taken so far. I got a lot of emails to get caught up on, but it's been really cool to see a lot of traders take the indicator. And now you guys are emailing me saying, "Hey, did you see UNH the other day?" It's like, damn, I didn't see it, but nice trade, like really nice trade. But there you have it, guys. As always, I appreciate you coming out. I think anytime a group of traders gets together after the market closes, that's an awesome thing. But as promised, y'all, we will jump into the good stuff here. Then we'll take it back to the slides. We'll do some Q&A. Then I will let y'all get on with your night. But we'll fire up ThinkorSwim, shall we? My precious. All right, so here's the scoop, guys. I want to show you one scan, and I'll give you the link for this scan. This is not the big 3 scan. This will get you like 50% of the way. So this is a scan that I use when I'm looking for my squeezes. All right, so for example, I want to look for a 15-minute squeeze. I want to make sure it's trading at the 15-minute launching pad, but I only want to look for bullish trades when my daily chart has got some bullish structure to it as well. So there are only a few pieces of the puzzle, but I do suggest you guys play around with the scan. It'll get you pointed in the right direction. Now, if we're looking for a 30-minute squeeze, I want to make sure we're trading above the 30-minute launching pad, and I only want to get bullish, even if I'm doing it in a lower time frame, off of good-looking daily structure. So I'll have Amelia post a link for that scan in the chat. But the real star of the show, guys, is the big 3 squeeze scan. So let me load that up here. I freaking love this thing. It's nuts. All right, big 3 squeezes. Where are you? All right, let me hide some of the ingredients here. But this is my job now. A couple of times per day, I'm going through the 5-minute, the 15, the 30-minute, the 20-minute. This scan, guys, has all of our criteria. It's a general statement. The only thing you're going to see on that scan are the setups that have our buy signal. And for the bearish scan, we're only going to see things that have the sell signal. So now imagine how much easier our job just got. I don't have to filter through all the BS anymore. The scan just takes me to all the A+ stuff. So what I'm going to do is I'm going to move this over to the screen to the right of me here. Like every good trader, I got a couple different screens. And I'm going to show you guys a few of the scan results. So, pick your time frame, right? Maybe you're a day trader. Maybe you like your 5-minute. Maybe you're a swing trader. You like your daily charts. You take your pick, guys. 5-minute up to a daily chart. This thing is firing on all cylinders. So why don't we let's do 15-minute scans, right? So what am I scanning for? Squeezes with my buy signal. So I'm going to fire up the scan here on the other chart. Make sure everything's adding up here. All right, let's dive in, guys. We already got a few. Now, if this scan is working, we should not see a 15-minute chart without our buy signal. So the first scan result here is Apple. I love it. Like, I love it. 15-minute squeeze, 15-minute big three, and it's bright green. It's my favorite squeeze, mid-compression. What about Keurig Dr. Pepper? Now, Keurig is not on the scan result, but to show you the difference here, look at KDP. I'm all set. In a split second, there's nothing for us to do here. Not for a bullish trade, not for a bearish trade, nothing. So when I'm running my 15-minute scans at night, I don't want to see crap like this. Now, that's how you end up in the office for hour after hour, just doing your nightly work. I love putting in the work, but I want it to be efficient. We don't want the junk like Keurig here. We got Apple on the scan result. That goes on my watch list. Next up, guys, is Amazon. Yeah, beautiful. And look at the labels here. 1 hour, 30-minute, in the 15-minute, lighten up here with the big three. So there's a bullish 15-minute squeeze with our buy signal in a stock that has our buy signal across multiple time frames, right? The more, the better. The more buy signals, the better. Next up, guys, is Costco. You already know it. Beautiful. Costco looks beautiful. How about Qualcomm? You get the point, guys? We can narrow down our entire prep time. Then we can head into the following session, focus on nothing but top shelf setups with the indicator and with the scan. Again, if I'm trying to look for a bullish trade, I really don't want to waste my time having to look through things like Coca-Cola. Like, what am I doing here? I'd much rather go walk my dog. We'll look at a few more. Raytheon. This is just a 15-minute scan, mind you. Raytheon. Beautiful. All right, how about Honeywell? A little bit of honey bun. I love it. I love it. All right, what about the 30-minute scans? And here's what I'm going to do for you guys. I don't want to keep you all night. I do want to answer some questions. Keep this room open tonight. When I cut you all loose, I'm going to go through all my nightly work. Then in the alerts here, I'm going to post a watch list for you guys to take into tomorrow of that combo, squeeze plus a buy signal across all time frames. So definitely make sure you keep the room open tonight here. And I'll try to get that out as quickly as possible. All right, 30-minute squeezes. Let's turn it up a notch. I'm going to throw a random one into the mix, guys, right? Someone let me know in the chat. And I don't even know the answer yet. I'm going to think of a random stock. Let me know if the next ticker we pull up has got the potential for a bullish trade. All right, let's do Disney. Oh, look at that. Disney's got the 15 and the 30-minute. I thought it'd be easier than that. All right, what about SLB? 30-minute, 15-minute. I'm trying to throw you guys a wrench here. What is not looking bullish right now on the 15-minute chart? The volatility index. Would we look for a bullish trade in the VIX right now? Absolutely not. All right, a couple more here, guys, up the 30-minute scan. Now, here's where you start to add a little bit of context. If we can start finding these on multiple time frames, let me see, 30 minute, 30 minute. All right, what do we got for 30 minute? But yeah, if we can find an hourly squeeze of the buy signal, and then there's a 30 minute, and then there's a 15 minute, the more the merrier. All right, 30 minute scan results. First up, JP Morgan. 30 minute squeeze, 30 minute buy signal. There you have it. Mastercard. A little bit of MA. Out of like Mastercard here, right? 1 hour, 30 minute, 15 minute big three. And that 30 minutes, my favorite combo. Buy signal plus a mid compression squeeze. What about Cisco? We bought Cisco today. I know nothing about Cisco. I don't even know what line of business they're in. But that's a 30 minute squeeze of the buy signal. Couple more here, guys, but hopefully you get the point. Okay, begin your entire process with a focus on nothing but A+. Everything else gets so much easier from there. Wells Fargo, beautiful 30 minute squeeze. How about Morgan Stanley? The banks are taking over. Beautiful. How about Goldman Sachs? Beautiful. You guys get the point. I'm not going to take you through all of them, but if I show you the scan here, that's 130 minute squeezes that fit all of my bullish criteria. So what I'm going to teach you in the Saturday class is, all right, this is great. How can we take a list of 100 and narrow that down to just a handful? We got a process for that. But, hopefully this motivates you guys. That's a huge thing in trading. Find a way to utilize technology to do a lot of your work for you, okay? Before we do some Q&A, let's take a look at the futures here. Keep in mind, guys, these signals are crazy on the futures. So S&P futures, we got buy signals on the 2 hour, 1 hour, 30 minute chart. But here's what's been kind of cool. And it's kind of making me want to trade futures. I'm sitting here the last few nights. I'm watching Bitcoin just going off. Hourly squeeze with buy signals. Hourly squeeze with buy signals. 30 minute rather. 30 minute squeeze with buy signals. Just by watching Bitcoin, which has kind of gone neutral today. So now it's not as A+ as it was. But just watching Bitcoin there, that gave me confidence to take that trade in Coinbase. 30 minute, 15 minute, 5 minute, big three. But all right, guys, those are some of the basics. But to me, that's the star of the show. 2 stars of the show: the scan and the multi-time frame labels. But I'll jump in the chat here, guys. We'll do some Q&A. But like I mentioned, keep this room open. About 30 or so minutes after I cut you loose, I will post in the alerts here my full checklist heading into tomorrow. But let me jump in here, see what y'all have got. So Anthony, that's an awesome question, Anthony. One of my goals, and of course it'll take some time, but I really do want to compile results in terms of, okay, what's the success rate of low compression squeezes? What's the success rate of mid compression versus high compression? I don't have that answer, Anthony, but I want the answer. I want the answer, my friend. Hey, Tom, thanks for stopping by, man. I'm looking forward to seeing you on Saturday. If Tom's there, it's going to be a party. SP, you do not need the Squeeze Pro. You definitely do not. And to be transparent, guys, I use the Squeeze Pro. It's a squeeze I have in my charts. My favorite squeeze is the mid compression, right? That's the original squeeze signal. So for what it's worth, yes, I take trades that are low compression. I'll take trades that are high compression. Do you need the Squeeze Pro? I really don't think you do. Truthfully, I don't think you do. Is it an edge, SP? It definitely is. But I say let the big 3 indicator help you make some money. Then you kind of parlay some of those profits into the purchase of the Squeeze Pro. Yeah, Avery, always. I'm not sure if it's going to be Eric or Duncan, but we will have a video up, and we might already, showing y'all how to add the labels and the signals to your charts. And then in the Saturday class, guys, we'll spend a lot of time. I'll make sure you guys have got all your bases covered. We'll make sure your scans are working right. We'll make sure your indicators are laid out perfectly. We'll make sure you're all golden. JJH, I'm looking forward to it. I'm looking forward to it. So, Bucky, that's a good question. And really, Bucky, at the end of the day, what the indicator is going to help you do is find those moments in time when the odds are really, really stacked in your favor, that the path of least resistance is to the upside or to the downside. In Saturday's class, I'm going to show you exactly what I do with those signals. And yeah, to your point, for me, it's a lot of trading lower time frame squeezes or buying dips to the 21 EMA. Now, that's not exclusive to any time frame. Give me a 5-minute chart with a buy signal, I'll buy a dip to the 5-minute 21. So ultimately, Bucky, and again, great question, you as the trader will figure out how you can best use these signals with your strategy. But that's the whole goal of the strategy class on Saturday in our live trading. I'm going to show you guys what I'm doing with these signals for longs and shorts. And yes, a lot of that outside of the reversals, which we're going to talk about in that bonus class, is trading squeezes or buying the dips, or shorting the rips, of course. It goes to 11. We are definitely going to talk about choice of strategy. Because the newest thing for me, guys, is it's the same criteria, same ingredients, but now I'm willing to play ball on any time frame. I'm not reliant anymore on that daily chart. So give me that textbook 5-minute squeeze. Yeah, I'm taking it. Give me a dip to the 5-minute 21 with a buy signal. I'm taking it. But a lot of what we're going to talk about in the class is, okay, we've got a 15-minute buy signal. Do we buy calls that expire in 40 days? Do we sell put credit spreads? Depending on the time frame, there's always going to be a few adjustments to make. So yeah, we are definitely going to talk about that. Awesome question, guys. Awesome. Yeah. So Lou, Lou, here's the scoop. As far as adding more time frames, because a few of you have asked, and Eric and I talked about it. We could add a 3-minute signal. We could add a 2-minute. We could add a 1-minute. And truthfully, if you guys would like that, then just let me know, and we'll probably make it happen. Just keep in mind, this is a really, there's a lot of crap going on as far as the script and the indicator. So the only thing we want to be cautious of, we just want to make sure if we start to add a 2-minute, a 1-minute, a 3-minute, we're cool with doing that. We just want to make sure it doesn't slow things down. So being that I don't really focus on timeframes under the 5-minute, we don't have the signals for the 3 or the 1-minute right now. But if enough of you guys would like that, just let me know. We can make it happen. But we have to make sure that things don't slow down. But yeah, Lou, it's definitely a possibility. Definitely a possibility. So private, in the scans, you can change what you're scanning in. So we can scan for things that are exclusive to the New York Stock Exchange. We can scan for things that have options. What you also can do, guys, is build your own watch list. So, private, you like to trade the commodity futures. All you got to do is build your watch list of commodity futures you like to track, and then run them all through the big 3 signals. Easy as that. Easy as that. But all right, guys, I think we're through most of the questions here. Yep, Bobby works on the works on the 195. Yep. Now, granted, we have it on the 4-hour chart, which technically is slightly different than the 195. But here's the thing, guys. I'm flexible. If you buy the indicator and you would really like to see that signal on a different time frame, just reach out to me. We'll see what we can do. We are here to please. All right, we'll do a couple more questions, guys. I did go a little bit later than expected, as always. All right, got a couple more here. You guys want to see Tesla and Microsoft? All right, not a problem. But yeah, Lee, Lorna, Mirza, we appreciate you guys sticking around a little bit later. I owe y'all a drink whenever I make it out to Texas. All right, Tesla. Right, boom. No more thinking. I'm not going to look for a short. And if I'm looking for a bullish trade, I'm doing that on the 1 hour, the 30-minute, or the 15-minute. We don't have the mid-compression squeezes, but we got some squeezes here. Well, we got mid-compression, but they're not. We got a few signals here on Tesla. Yeah, we got a few. 15, 30 minute in the 1 hour. And then Microsoft. The old Microsoft. I can't look for a bullish trade yet. I love to trade Microsoft. I'm kind of asking myself, when is Microsoft going to join the party here? No buy signal, no trade. All right, guys, we'll do one more question. But hey, if you got any more questions, just keep the chat open. I'll run the scans. I'll get that watch list posted for you. Then I'll try to go through and ping as many of you as possible. Yeah, Anthony. So what I'm going to do, because I wrapped it up today, I'm going to pass along the Big 3 squeeze scan to Amelia, and then she'll make sure that gets added to the room drive as soon as possible. No promises that we can get that done tonight, but I will make a friendly nudge for you, Anthony. So, Mike, you can use the extended hours. I'm going to be real with you. I never use the extended hours. And my only fear would be is that we start to get false signals, if that makes sense. Like in other words, now you've got a 5-minute buy signal or a 15 because of the extended hours. But if it wouldn't be there without the extended hours on, that's when things can get a little bit messy. So my suggestion is play around with it. Come to your own conclusion. Awesome question. Awesome question. Yeah, my favorite DSI, Boeing. All right, guys, we'll do one more question here. One more question. Yeah, and then Chris, as far as scanning capabilities outside of ThinkorSwim, I would over time like to be able to solve that problem for folks who can't use ThinkorSwim. So that's definitely going to be a bit of a passion project in the future. Definitely in the future. And then Ren, as of right now, the indicator only works on TradingView and on ThinkorSwim. But all right, guys, we went about 20 minutes over. So a big thank you to Lee, to Lorna, to Amelia, to Mirza, all the other mods for sticking around a little bit late. But also, guys, a big thank you to all of you. It's on my end, it's 9:30 at night. We're all tired. We got a crazy market. We're putting in a lot of work. So I really thank you guys for showing up and putting in a little bit of extra time. I hope you all found it helpful. And of course, I hope to see all of you for Saturday's class. But I'll let you guys go now. Keep this room open. Give me 30 minutes. I'll get the scan results for tomorrow posted. And then if you guys have any questions, I'll make sure I put my email in the alerts as well. And for those of you in the trading rooms here, I'll be seeing you tomorrow. But have a great night, guys. I appreciate you. Be safe. Take your dog for a walk, and we'll talk soon. Adios.